Welcome to Feeley Driscoll's Webcast series. My name is James Erdikian, Tax Director at Feeley Driscoll PC, a CPA and consulting firm located in Boston, Massachusetts. We can be reached on the web at www.fdcpa.com and by telephone at 888-875-9770. Today's presentation is on compensation for S Corporation shareholders. If you own an S Corporation, this should be of interest to you. For S corporations, it is tax advantageous to keep the shareholder's salary low and the S corporation net earnings high. This is the exact opposite for C corporations, but that's a story for another day. This is advantageous for S corporation shareholders because minimizing payroll compensation avoids the employer and employee FICA and Medicare tax obligations of up to 16.2% on the first $118,500 for 2015 and 3.8% over that amount. Net income from an S corporation is not subject to the self-employment tax per Revenue Ruling 59-221. The self-employment tax is in essence the same as the combined FICA and Medicare tax for an employer and employee. It should be noted that the income from partnerships and sole proprietorships are subject to the self-employment tax. Business owners soon saw this loophole, and some S corporation shareholders stopped taking any payroll compensation and instead just took S corporation equity distributions so that no FICA, Medicare, or self-employment tax was paid. The IRS successfully challenged this in court and succeeded in reclassifying the S corporation distributions as payroll compensation, subject to FICA and Medicare tax. Some S corporation shareholders took token payroll compensation and the lion's share of their remuneration as S corporation distributions. The IRS again attacked and succeeded in court. The court looked at how active the shareholder was, what other employees in the company were paid, and what others in the industry were paid. Most vulnerable to reclassification were service-providing S corporations such as CPAs, attorneys, real estate agents, consultants, etc. Interestingly enough, in recent cases, the courts typically cap the total payroll compensation to about the FICA ceiling, which in 2015 will be $118,500, rather than reclassifying all of the S corporation distributions as payroll compensation, saving 3.8% on the amount of the S corporation distributions not taken as payroll compensation. 3.8% is not that significant, but it's something, and it can add up if there are multiple shareholders. There is an added benefit for manufacturers and engineers too, which is called the Domestic Production Activity Deduction, which is 9% of taxable income. So keeping profits high and payroll compensation low will also enhance the savings for these types of companies. The negatives are possibly reducing shareholders' retirement plan contributions, if based off of payroll, and incurring state S corporation level taxes. Please note that Congress is considering eliminating the prohibition to subject S corporation earnings to the self-employment tax. In summary, keeping shareholder compensation low and S corporation net earnings high is tax advantageous in general. Taking no or token compensation may result in the IRS deeming all S corporation distributions as payroll compensation. Keeping payroll compensation at or around the FICA ceiling amount of $118,500 may avoid scrutiny and achieve some tax savings. Remember the golden rule: pigs get fat, hogs get slaughtered. This is James Erdikian, Tax Director at Feeley Driscoll in Boston, Mass. We would be glad to advise you on this and other tax issues your business is facing. We can be reached on the web at www.fdcpa.com and by telephone at 888-875-9770. Thank you.